Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we were talking last week about the correction in the markets, and it was rather sharp, but it was also rather short-lived. So where do you see things at the moment? Do you think maybe we've just come back a bit and we're still in a longer phase correction, or do you think maybe that was it, essentially?
It's very difficult to say now. I want to refer back to the chart of the S&P 500 that we looked at last week, just to show what's happened and what potentially I think could happen from here now. If you look on the screen, we've got the chart of the S&P 500 shown there now. And what I identified last week was that we've got this support at 1,900 on the index. And if you have a look, last week the market pulled back close to that level. The spot market of the S&P 500 didn't actually get to 1900. It stopped a bit short of that level. But in the futures market, in after hours trading, it did actually trade below 1900. And we've now seen this nice sharp reversal and a rally back up. Now, what I think potentially happens from here is that we potentially become range bound for the moment, because there's quite a bit of resistance up here at 1950, 1960, that sort of area. That would now be the underside of the 50-day moving average. And then, potentially it's possible that if we have some choppy action now in the rest of the month, we maybe oscillate back and down, up and down between 1900 and 1960, say. August is traditionally a bit of a quieter month for equity markets. It's the Northern Hemisphere summer, so the activity levels are automatically lower because of that. And I'm also wondering, we do have the end of quantitative easing in the US is looming. That only comes in October, but one does wonder whether the markets are not beginning to maybe price that in early at this stage. So, to me, there's not a huge amount of reasons to think that we're going to necessarily rush off back to all-time highs again here. I do think we might still be in a bit of a consolidation type of phase for a little bit longer. But
consolidation implies choppy trading rather than a corrective phase, so that we might just muddle along, as you say, between that particular range.
That's what I suspect could happen from here. But we need to monitor it on a day-to-day basis. But I think for me, that 1900 support level on the S&P 500 was very, very, very important. And now we need to see in the rest of the month whether that level holds or whether we do actually have another leg to the downside or not. For me right now, the picture's not entirely that clear.
Yeah, well, is it ever? Garth, let's talk then about some of the open trades that you've got in the portfolio, particularly Naspers. And Naspers, so was it last week, Wednesday, that I think it went to 14 at one stage, and then it's kind of pulled back, but it's still looking good. Are you still long with the trade?
Yeah, we're still in it. It is still looking good. If you have a look why we did this trade, first of all, there was this big overhead resistance area at 1,350 Rand. And my suspicion was that we were bumping up against it and we were likely to break through that. Now, that has in fact happened. When we went into the trade, we identified this upward sloping channel, which was evident, and we also noticed that the stock had broken out through bit of short-term resistance through the June high, and it had pulled back and it had found support back at that June high. And we went along and we bought 165 CFDs for the portfolio at 1,300 Rand with a stop loss at 1,270. And then what I noticed a week or two later was that there was this bull flag pattern forming. And that's typically a bullish continuation pattern within a rising trend. And we were looking for a break to the upside there to continue that trend. And that's exactly what we got. And typically what you do is you take what we call the flag pole, and you take that height and you project that same distance up to get your target. And it gives us a target here of around about 1,420 Rand. Maybe you could even argue we go a bit higher, up towards 1,450, that sort of area. But on the basis of that, I actually added to this trade. We went and we bought another 75 CFDs at 1,339 Rand. So we're still sitting with that position at the moment. It's working quite nicely for us. The stock is above 1,400 Rand at the moment. And it still looks to me as if it's likely to nudge higher up towards those target levels. But I certainly will be looking to sell into strength towards our target area, there and thereabouts in the week ahead.
Okay. All right, so hopefully that gets to the 1420 area, would be great to see. And then let's talk about what you're going to add to the portfolio this week.
Yeah, it's AngloGold Ashanti. Now, I think we've traded this stock a couple of times this year, not with much success. So I'm hoping this time might be better for us. There's quite a few things to talk about here. So what I've got up on the screen at the moment is a long-term graph of AngloGold Ashanti. And you can see that through 2011, 12 and into 2013, this was a pretty poor performer. But we had this lovely double bottom, which formed through late 2013 and early 2014. The stock then broke above that area over there to then actually validate that double bottom pattern. And that was resistance. And you notice how that level became support on the pullback, which is very healthy. And the stock has since bounced off that level. Now, on a more medium-term basis, the next major area of resistance actually comes in up here, where all these lows from mid-2012 come in, and that's at 250 Rand per share. So I do think there's a chance that we still go back up there over the medium term, and that what we're seeing in the share price at the moment over the last 6 or 7 months or so has actually been a consolidation type of period for the share. But it is starting to look quite interesting, and if we zoom in on that area that I've put a box around now, I want to zoom in on that area and show you why I'm starting to get interested in the stock from here. All right, so the first thing is that notice there's an uptrend which goes back to January of this year, and it joins the recent or the May low, and again the recent low that we've seen at the beginning of August. That's quite a bullish sign, the fact that the stock has bounced off that support level, that uptrend support. Also notice how oversold the stochastic is at that point in time. So that sets us up quite nicely for a potential push to the upside. What I've also noticed here is that there's a big inverted head and shoulders pattern that's been forming over the last number of months. That pattern started to form in March actually. And what you typically do with these is you take the height of the head at its broadest point, and then you project that distance upwards from where the break of the neckline would occur. Now this neckline here is at 196 Rand a share. So if we can start breaking out through 196 convincingly, closing above that level and showing some sort of fairly sustained trading above that level, then I think it opens a target to 235 Rand a share here, which is quite a nice upside target. So on the basis of that, my feeling is that the likelihood is quite strong that it will break through that resistance now, especially given that the stochastic is still moving up off of oversold levels. And also buying it here as opposed to waiting for the breakout through that neckline actually gives us a better risk to reward ratio. So I've gone along, I did this trade last week actually, I think it was last week Wednesday, and I published this analysis on my website. Subscribers to my website would have seen this analysis last week. We went long, we bought at 185 Rand. The stop loss is 179 Rand. That stop loss would basically imply that we need to take out last week's lows.
Okay.
And then the target is 235 Rand. So if I put our risk to reward blocks on here, you can see there's actually a very, very good risk to reward ratio here. The red block represents the risk. That's the difference between where we go into this trade and where our stop loss would kick us out. And then the green block is the difference between our entry price and our potential target. Obviously that's our reward. So if you look at that in relation to each other, you can see that the reward, the potential reward, is much bigger than the risk that we're assuming on this trade.
Garth, do you find it, I don't know if this is going to be a stupid question, but let me go for it anyway. Do you find it instrumental to go back quite a long time looking at the gold charts in particular? So, I mean, when you look at that, in other words, to not see the trading action of the last couple of months in pure isolation, because, as you say, you've got a medium-term target of 250, which may happen in a few months' time. Did that sort of influence your thinking in any way, looking at this graph? Yeah,
it certainly did. You know, I do look at the big picture. What I often do with trades is I actually look at the big picture first and see what does the structure look like from a bigger picture perspective, and make an assessment from there, and then start to zoom in on the shorter time frames to get a more short-term view. And so you want to try and say to yourself, well, what's my big picture outlook? And in the context of that, then let's look at the smaller time frames and try and time an entry to get into a particular trade.
So you do feel it's quite useful to look, say, over a 2 to 3 year period, and then you go and narrow down in the last couple of months?
It certainly is sometimes. I mean, I won't say that I look at it, I don't take every trade and look at a 3-year graph. Sometimes I don't look as far back as that, but I think in the case of this one, it's been quite useful to do that, knowing what the overall bigger picture structure looks like, and knowing that longer term momentum does look as if it's turning to the upside for AngloGold Ashanti.
Yeah, after a couple of really rough years. So, Garth, if you can take us through the trade in greater detail.
All right, so what I mentioned, we've gone long at 185 Rand per share. The stop loss is 179 Rand here. That means that the risk per share is 6 Rand. So that's the difference between our entry price and where our stop loss would kick in. I'm risking a full 2% of our portfolio on this trade. So we've got around about 350,000 Rand in trading capital at the moment. I am risking 2% of that, which is therefore 7,000 Rand. And what we do is we take the portfolio risk, 7,000 Rand, and we divide that by the risk per share to get the number of shares that we can trade. And it comes to 1,166 shares. So I've just rounded that down slightly, and we're trading 1,160 CFDs here. My target is 235 Rand, and that means that the risk to reward ratio on this trade, if it should work out, is 1 to 8.3. So it's a pretty decent risk to reward ratio here. And then what I'm adding in this week, because I've been asked by one or two followers before, is to differentiate between what is exposure and what is risk and all these things. So to try and clear that up, the total exposure of this trade is 214,000 Rand. That's the value of 1,160 shares of AngloGold. 214,000 Rand. But because we're trading CFDs, we don't have to put up the full value of that trade. So we only actually, the margin requirement that our IG, our provider in this case, requires from us for AngloGold is only 5% of the notional value of the trade. So 5% of that is 10,730 Rand. So that's how much of our capital actually gets tied up in this trade in terms of margin. But keep in mind that our exposure is the bigger number, the 214,000 Rand.
Yeah, but what you actually stand to lose if the trade goes wrong is 7,000.
Yes, provided we can execute our stop loss at the said level.
Yeah, that margin of 5%, that's kind of on the low side, isn't it? Is it because AngloGold Ashanti is so liquid, so easily traded, and maybe the market maker, the providers, is feeling fairly confident of you going into the position?
Yes, it certainly is because the share is very liquid. That's definitely one of the reasons. The other reason is that the market maker will look back at the historic volatility of the share, and they do an analysis, look at the standard deviation in terms of day-to-day movements on a share price, and they want the margin to be such that it can capture an outlier day in terms of statistical history.
Okay.
Yeah, and an anomaly. The other thing also to remember about IG, who we use as our providers here, is they have very, very well developed automatic risk management procedures in place. So they can actually afford to margin their CFD slightly lower than some of the other providers do, based on the fact that their risk management systems are so good.
Okay, well that's looks pretty dandy. Garth, what does the portfolio actually look like given the activities of the last couple of weeks?
All right, well these are the open positions we've still got. We've got our put spread option structure working away in the background for us. We've still got a long position in PSG. We're up 10,000 Rand on that. We're still long of Naspers, where we're up 22,000 Rand. And then this AngloGold trade that we've entered this week is looking good for us. It's up 9,300 Rand. So that puts our portfolio at 356,000 Rand.
Nice.
It's up 42% for the year to date. That is a new year to date high for our portfolio. So things are looking good, and I'm happy with these trades as we've got them at the moment. Also knowing that we've got that options protection in place should we see any more downside on our market.
Just the PSG trade, that's actually been open for a while now. I mean, what, sort of at least 6 weeks?
Yeah, a couple of weeks, definitely a couple of weeks. The thing is, my feeling on this one was that we got such a good entry price, and I'm quite happy to maybe hold this one for a little bit longer as a bit more of a medium-term trade.
Okay.
Because I do think we got in at a really, really good level, and there is still probably potential upside here. So I'm happy to hang on to that one for the time being.
Okay. And Garth, then just lastly, to end off with, it is 5 years of Traders Corner. We're going to have a couple of special shows. Just remind us what subscribers to the website can actually gain.
Yeah, so if you actually go to my website, traderscorner.co.za, you'll see that we're running a 5-year birthday special promotion, and you can see the button in the middle of the page over there. It's 149 Rand for 1 month subscription to Traders Corner. That's half the price that you would normally pay. Normal price is 299 Rand. So go along, subscribe, see what you get. All the stuff that we cover on this TV show is published on the website first, usually, in addition to a lot of other analysis that we publish. So go along, have a look, see, for 149 Rand, it's a bargain at this for the birthday month.
Okay, Garth, we'll leave it there, shall we?
Okay.
And thanks as always for joining us. We'll chat to you next week, and let's hope AngloGold Ashanti does a stunner. That is Traders Corner, and Garth McKenzie is, of course, the founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.